Hey guys, how's it going? Valley Venture Investing here today. So, we finally saw Apple's Q4 2019 earnings. Now, I wasn't too excited for these because it's going to be the Q1 of next year where we see a lot of the new iPhone revenue, which there seems to be a lot of positivity on that, as well as a little bit of their services in terms of Apple TV Plus. But nonetheless, it was still an exciting quarter, and there were some interesting things in there. So make sure you stay throughout the video, and I'll highlight some of those. Taking a look at the stock right now, the reaction was initially pretty good. I think it was up around $6 per share, somewhere around there. Now we're, at the time of recording this, getting close to 250, up about 2% or so. It's kind of been interesting to look at Apple on this little bit of a run up that it's had lately here. It seems to be getting near that 250, and then it just, it just doesn't want to hit it. It seems to be a psychological barrier. So at about 240, I actually sold off the additional position I bought into Apple. It was a very small position. It was one I bought back at around 150 in, I believe it was January. And made such a phenomenal return. I just had to sell it. But my big position on Apple, of course, I still hold that. Still love the company, as you guys know. So let's take a look at some of their financials here. The most notable ones, the ones that people care about the most. I know there's a lot here, guys, but I'll try to make it simple for you and go through and we can kind of see what's driving the stock. Revenue. So as you can see by all the green, they pretty much beat on everything, even though there was lowered expectations due to some of the estimates coming down due to China and the tariffs and stuff. But revenue was $64 billion. Now this was versus the estimate of $63 billion. So they beat there. It was up about 2%, and they said it would actually have been even higher if they didn't have a currency drag. And this was the highest September ever. So we're talking about revenue as a whole. We'll get down to the iPhones, but at the end of the day, is the company growing? Highest Q4 ever in terms of revenue. That's some great news. Of course, EPS was $3.03. That was versus $2.83 estimate. So that's a pretty huge beat right there. Although we do know that they're buying back. Like Apple's got so much cash, right? They're buying back a huge amount of shares, which I like, but I would also like them to do a lot of acquisitions and stuff like that. So that's up 4%. So that's why we can see that difference there. Net income was $13.7 billion. Now, these are the products and services. This is kind of what investors gauge down more on here, or they clamp down on and find more important. This is the key area that we saw was actually stronger than expected. So I think that's why we saw the positivity in the stock, even though it's been running. iPhone revenue was $33.36 billion. Now the estimate was 32.25. So that was actually a beat on the estimate. That was still down 9% year over year. However, the last couple quarters were a lot more than that. I think they were like down 12% and 16% or something like that. So we've seen some improvement there. The reason on the conference call that they said there was some improvement was on the final quarter here. There's a very positive demand for the new iPhones. Of course, this quarter is not going to have much at all of these new ones, so that's why it's very positive. That's kind of one of the reasons that the stock actually started running up, is because there's been a lot of reports that there's been some positive sales numbers there. So that's something that actually helped it as well. I also wanted to mention the install base. They said it was an all-time, as always, an all-time record in terms of install base, and that's something that I follow very closely because Apple is now transitioning more into a service company. So even if you did sell less iPhones or whatever, and they don't report that now, they're trying to get you to focus on, because I agree, if you have more people in your service, in your ecosystem, that's going to drive more revenue services revenue rather. So always something to watch. I'd watch that, guys. iPad did phenomenally, up 17%. The Mac was kind of a different one. It was great. It was down 4% year over year. However, this year was a phenomenal year for Mac. I think I mentioned on one of my other videos that we actually seen it grow quite a bit. And they said that 2019 was an all-time high in terms of Mac revenue. So for a company that's kind of going past Macs and getting more into iPads and services and stuff, that's pretty phenomenal as well. The two biggest ones that I've said multiple times to you guys, that if you watch my videos you probably know, is services and wearables. Those are what are going to drive the company and what are phenomenal, blowing my mind here. Services were 12.5 billion. The estimate was 12.16 billion. That was up 18%. 18%. That would be something, that would be amazing in itself. But the fact is, we keep seeing this growth in services and revenue, up 18%. I can't even remember how much it was up in the other quarters. You have to go back and watch my videos. I think they said it's something like in the size of a Fortune 75 company or something like that. So this beat the previous record by $1 billion. So there you go. These numbers are just phenomenally huge. You want to see how much it beat the last record, which was amazing as well, by $1 billion. So now we're seeing $46 billion just in services for the year. So you can see how Apple's transitioning there. Wearables was up, get this, yeah, that's right, 54%. Again, that was driven by the AirPods, which they actually just released AirPods Pro, which look great. I think that's going to be great for the holiday quarter because there is a differentiating factor, a coolness factor with them. They do look significantly better. They have other features such as pushing them, and because they are actually sound insulating like the Bose ones, you can push a button and hear what's going on in the outside. So that's a unique feature of them as well, and I think those are going to sell like crazy. So that's going to continue some of the wearables growth as well. One of the big things that always guides the stock is the guidance. This is maybe one of the things that cause the stock to not rise as much. There's a lot of uncertainty right now as well. But their guidance is between 85.5 and 89.5 billion. Now the estimate was 85.6, so it's kind of like right in the middle. Well, not right in the middle, but right on their low end here. So there's still a lot more upside. So definitely a positive, but it's kind of in there a bit. And one last thing is that I wanted to mention about the services again here, is that a lot of the people, everybody's focusing on like the iPhone, that's what causes stock to come down, and why I don't think the stock's trading at a reasonable multiple. I think it should be something reasonable. Clorox Bleach is at a higher multiple than Apple, and just compare the numbers on the company and the two companies in the outlook. It's just crazy. But the margins on the services are 64%, whereas the products are around 30%, they said, on this quarter. So to drive, these two, wearables is very high too, but specifically services is going to be phenomenal for the company. People talk about like the iPhone, the margins on when the iPhones were so juicy. That's why people were so concerned that, potential iPhone units were going to drop and stuff like that. But services, they have higher margins. So that's one thing that I don't think the market gives Apple enough credit for, and I think that's going to be something that's going to drive the stock inevitably to all-time highs after all-time highs. So let's take a look right now at the financials that they produce. We obviously can't look at their 10Q or anything like that, but we can look at what they provided so far. So in terms of net sales, they're actually up year over year. Products were 51 billion. Services were 12.5 billion. So we saw about roughly a $2 billion increase there. If we actually jump right down to the bottom, net income, we've actually see that net income is down year over year. Last year is about 14.1 billion, and now it's 13.686 billion. So it's not really a huge difference here, but this is one of the reasons I think that the stock is still not like raging to all-time highs, is because of that. But why is that the case? I haven't done a video for you guys yet on how to read these statements or whatever, but if you look at the top of what we just looked at, net sales were up. So what's up with this? So if you look at the cost of sales here, we can see that the cost of sales were relatively flat. However, the total operating expenses did increase, and that's what made a pretty big difference here. But what was different about it? Well, we can see that R&D, our research and development, actually increased pretty significantly there. Selling, general and administrative expenses increased as well. So that took total operating expenses up to 8.6, 8.7 billion from 7.9 billion. So is that the end of the world though? I think that's a good thing that we're seeing research and development grow, and we're actually seeing growth in the net sales as well. Of course, down the bottom here we can see the EPS that we talked about. I like to look at diluted most of the time, so diluted was actually $3.03 versus $2.91 a year ago. Taking a look at the net sales by reportable segments, so this kind of gives you an idea in terms of revenue. The Americas were actually up. Europe was down a little bit, so we've seen a little bit of softness there as well. And Greater China was down, but not as much as before, so there we are seeing a resurgence there. Japan was down slightly as well, and also the rest of Asia Pacific was actually up. So the total net sales there we can see again are 64 billion versus the 62.9 billion. By category, like I said before, the iPhone sales numbers per iPhone are actually down from 36.7 billion to 33.3 billion. Again, I think that's what people are focusing on, and that's what people are getting fixated on, because again, look at the very bottom, 64 billion versus 62 billion. Mac, like I said, was down slightly. iPad was up significantly, and again, wearables are killing it, and services are killing it as well. Taking a look at the balance sheet here, we can see the current assets and their non-current assets. They have roughly $206 billion in cash. If you're wondering how that actually comes about, you add the cash and cash equivalents here, marketable securities, because marketable securities are essentially cash because they're very, very liquid. And then you also count on the non-current assets here. We have marketable securities. It's just a difference in how they're classified, whether they're short-term securities or long-term securities. So they have over 105 billion there as well. So it's it's roughly $206 billion, and they do owe quite a bit of debt now, but that they're doing that strategically. Rather than spending their cash, it's kind of just bringing it back overseas. It's cheaper to do it this way. So they are continuing, they say, on their goal to become net cash neutral relatively soon here. Another interesting thing here, I don't make much of this, but I'm always looking through the cash flow statement here. Under investing activities, their purchases of marketable securities, i.e. stocks and other companies, has come down significantly from 71 billion to around 39 billion. So, what does that mean? Are they trying to, keep more cash, or they think that stocks are overvalued? You can basically think whatever you want there, come to your conclusions. I'd love to know what you guys think about that down below. Their proceeds from the sale of marketable securities was actually up. So does that mean that they're actually selling more? They think the market's overvalued? I'm not too sure on that. Again, we see their cash flow generated by investing activities is 45.8 billion. That's pretty crazy. And one other thing here, the repurchases of common stock, being the stock they buy back, is actually down a little bit, but it's not much, 66.8 billion versus 72.7 billion. So again, why are they doing that? Do they think maybe their stock is becoming, not as extremely cheap as it was before, which it isn't, of course, as cheap as it was before. These are just little things that I look at. They can mean many different things in the internal organization of the company, but I think it's something interesting to look at for sure. So there you have it, guys. A very great quarter, actually a lot better than what I was expecting. I wasn't expecting to be too interested in this whatsoever, because it's it's Q4 and I want to know what's happening next year. I'm really, really interested to see what's going to happen with Apple TV Plus, because that's going to be coming on November 1st. However, I think we're going to see delayed numbers on that as well, because a lot of people that are buying new iPhones get a year free. So we could be seeing numbers that aren't really that accurate. They're trying to gain traction, and I think that's a great thing to do long term. But they're giving a year free. Like, that's a lot. So we're not necessarily going to see the numbers. So hopefully they report how many people are actually using it, stuff like that. They did mention Apple Arcade on the conference call. However, they didn't mention, the number of people using it, and they do have a free trial in there as well. But that could be, a sign of one negative thing, is perhaps that's not doing so well, although I never really cared about that too much to begin with. But I hope that they do provide us with that information. And unfortunately, we're not going to probably see that for a little bit, of how much it's actually, catching on, and how much revenue they're going to actually be able to generate. So we're going to have to wait. But of course, I think this is an awesome move for Apple, and I hope they just throw tons and tons of money at it. They have so much money. I think that they should make a real good run at this and just create an awesome streaming service. So that's going to be it for today, guys. Please Leave a comment down below. I'd love to know your guys' thoughts on it. Don't forget to like and subscribe. It really helps the channel. I want to grow this channel out so I can do more videos for you guys in the future. That's going to be it for today, guys, and I'll see you in the next one.